Well, earnings season is kicking off next week, and we're going to bring in Bloomberg's Emma Chandra right now to talk a little bit more about what to expect. So, Emma, it seems like the bar for earnings this quarter is pretty low.
Yeah, you're absolutely right, and it has really begun. We've had a few companies report this week. Today we heard from Delta, we heard from Fastenal, we also heard from Bed Bath & Beyond. Bit of a mixed picture from them, but as you say, it really kicks off next week. Next week we get some 59 S&P 500 companies reporting. Then the following 2 weeks, the last 2 weeks of July really are the big beast. More around 300 S&P 500 companies will report over the course of those 2 weeks. Expectations, as you say, are low going in. We're looking at a drop in year-on-year earnings this quarter. Bloomberg Intelligence putting that at some negative 2.7%. And we should have a chart which should be able to show that as well. You can see there are some big discrepancies in that as well. So we're looking at 3 sectors that look set to gain, the majority of the rest set to lose, but of course the likes of tech and materials doing significantly worse. And of course, when you look at the catalyst that there may be, we don't have the effects of a big tax cut this year. Earnings, investors very reliant on the dovish Fed at the moment. Also, though, they won't quite like it if we get any really weak economic data, so they're kind of in this difficult place. The trade war remains unresolved. We've already seen over in Europe, BASF, they came out and said that they're concerned about that, and they're seen as a bellwether. They put out a profit warning as well. We've seen the hotel industry downgraded by JP Morgan. So a lot of bearishness really with regard to second quarter earnings.
And if you pull up that chart again that shows the estimates for earnings for the different sectors, what got my attention was tech, off by 11%, but that is a big sector in the S&P 500, and without tech performing, you don't get gains in the equity index. The bar is fairly low, though, and these companies are very good at beating lowered expectations.
Yeah, that's right. I feel like in the next few weeks we'll be talking a lot about that bar being low, that people have been able to beat something that they've already perhaps guided lower anyway with analysts. You're right that tech is really in unfamiliar territory. Expectations of a decline in earnings growth of 11% year over year. That follows last quarter's fall. Expected to see another decline in earnings growth in the third quarter before some recovery in the fourth quarter there. Now, the influential tech analyst over at Bernstein was saying this week that they're really concerned about the high valuations for the big companies, really focusing perhaps on cheaper, higher quality stocks within the tech sector. But one thing I want